Hey, there's one thing I can guarantee you about holding property over a longer period of time. It's going to go up and it's going to go down. Guess what? That's called a property cycle. I want to show you all about that right now. So if we've got our dollars and we've got our time axes here, let me just sort of let you know, that's called the commodity curve. So when supply equals demand, the market is flat. There's no upward or downward pressure on that market. Then especially when it comes to the housing market, there's development, there's infrastructure, there's jobs, there's growth. We call that the 7 ingredients to a healthy property market. And oh, by the way, that's a rising market, booming market, whatever you want to call it, whereby demand is outstripping supply. More people want stuff than what they can get their hands on, and they're going to pay more for it. It'll get to a point though, team, where it'll reach the top of the market. Right now, I think the property market is definitely at the top in some places that were already too expensive anyway. And it'll reach the top there where supply equals demand, and it'll quickly just come down a little bit. Now, this is not the bursting of the property bubble. This is not like the worst case scenario when it comes to holding property. It's just a little correction. Because if something was already too expensive and those market forces start to work not in your favor, it's going to come down where supply outstrips demand, and it's called a correction. Now, depending on when you bought, say you bought here and it goes all the way up to the top, and then you're still higher, as you can see, from when it was before. So it's really critical that you don't buy at the top. And trying to time the market is not bloody easy, let me tell you, but that's why you need research, that's why you need coaching, that's why you need mentoring to make sure that you're buying at the right time. Imagine buying at the market here. All those success stories that you've seen on our Facebook page, guess what? They bought down here, and that's what $200,000 worth of growth has done for every single one of those clients over the last 18 months. Doesn't happen by accident. We've been doing this for a little while now, but as you can see up the top, good property investors don't just buy property, they buy time, because I can guarantee you this is what your portfolio will do over the next foreseeable future, probably forever. But I don't know whether you've done like year 8 geometry at primary school. I remember that line was called the line of best fit. It's really, really important. Do not focus on short-term predictions. Focus on the bigger picture, focus on long-term growth, and you will nail the Australian property market.